Aloha folks, welcome to another video. If you are new to the channel, my name is Mark, Mr. Dividend Investor. In today's video, we are going to look at this dividend company that has a dividend growth of 43% the last 10 years. So if you're interested and want to find out what this dividend stock is, stick around. Hope you like this video. Please do me a favor, give it a thumbs up. If you are new to the channel, I do a lot of dividend reviews of dividend stocks that I personally look at and put on my watch list and invest on. So if that's something you're interested and you want to learn about different types of dividend companies to possibly invest on, hit that subscribe button. Do me a favor and don't forget to hit the notification bell so you don't miss out on the new videos I put out. With that said, let's take a look at this company. So this company is called Amphenol. Ticker symbol is APH. Now this is a company, is one of the world's largest designer, manufacturer, and marketers of connectors and interconnect systems. So they do electronic fibers, as you can see from this one. They do connectors, cable assemblies, sensors, printed circuits. So basically you name it. Pretty big company. Now if we look at simply say dividend, I always like to check on the dividend safety score. I like looking for safe, very safe dividends companies. Simply Safe Dividend is one that I really look at. They're not sponsoring me, so I use this website, so definitely go check it out if you are looking for something at some source to look if their dividend is safe or not. So in this case, dividend safety score, which is 87, which is very safe. For this one, the dividend yield is 0.92, market cap is 51 billion. Now if we're looking down the key metrics, you can see payout ratio is about 25%. During the recession, they have maintained their dividend. Now looking at the dividend growth, you can see the last 10 years 43% per year, which is very impressive. Last 5 years is up 14%. As you can see from 2011, it's been from 2004 to 2011, it's just been pretty flat, and then from that on it's just skyrocketed and going up, so which is good. So 9 years of dividend growth streak, uninterrupted dividend streak of 15 years without a reduction, so pretty good stats. Payment details, you get paid quarterly in the months of January, April, July, and October, with the annual payout of 80 cents per share. The ex-dividend has passed in December 20th. If you invested in there, your payout date will be January 12th. Now if we look down to some of the valuations, you can see the stock may be reasonable value today, so that's a good indication. Looking down to some of the financials, I always like to look at the return on invested capital. So you can see above 8 is the preference, so you can see it's above the 8. And the return on equity, so it's above 10, so pretty good stats. Now if we go to Yahoo Finance, again the market cap is 52 billion, PE ratio is about 36, forward dividend yield is about 0.8. Now if we look over here, they make it as a near fair value. Now if we look down further, you can see in the earnings, look at that, 4 beats for the past 4 quarters. If you look at the financials, you can see based on the chart, the revenue has been going up every year. 8 for 2020, it's 8 billion. Now if we look down to the recommended trends, it's a mixture of holds to buys and to strong buy. Recommendation is between a buy and a hold. The analyst price target currently right now it's 86, the average about 85, so it's a little bit higher than the average. Now if we look to the chart section, so again I'm looking at it in terms of comparing it with the S&P 500, you can see the S&P 500 is the light blue, and then APH is the dark blue. So you can see it has been beating the S&P 500 for the past 5 years based on this chart, so not bad. Now if we go down to tip ranks, based on their analysis, they rated as a moderate buy based on 9 rating. There's about 5 buys and 4 hold. Price target is about 86, so it hit the price target. 12-month forecast rated as a high of 100, the average of 86, and the low of 76. So if the 12-month forecast is right, you got a couple more to reach that high, so not bad. And now if we look at CNN Business, based on their price forecast is pretty much similar, with a high of 100, medium 85, and a low of 76. Now their rating is about, analysis recommendation is about 8 buys, 2 outperformed, 7 holds. Now if we go to Webull, based on their analysis, there were 17 they rated as a buy. 41% said it's a buy, about 35% it's a buy, and then 23 means they said it's a strong buy. Now their price target is a little bit different, just about $5 less, and the high of 95, the average of 84, and the low of 75. Now if you look down to the institutional holdings, you can see it's just kind of like a mixture of increases and decreases and sold out. So you got 78 for new, 291 have increased, sold out's about 55. Now we go over to bar chart. Based on their price target, you can see the high of 95, the target of 82, and the low 72. Now their analysis rating is about, currently it's about moderate buy. You got 10 analysis rating it, so it's a breakdown of 6 buy and 4 hold. So you can see pretty similar the past 3 months, which is a moderate buy. Now if we go over to Simply Wall Street, based on their evaluation, you can see the share price versus fair value. They rated as overvalued about 23%, so they feel that the fair value would have been 67. Currently it's about 86, so it is 27% overvalued. Now if we look to the overview, you can see based on their analysis, there's a solid track record with adequate balance sheet, and it pays a dividend. Earnings have grown 12% per year over the past 5 years. So some of the risks, they have a high level of debt, and there's some significant selling over the past 3 months. So now if we go to Robinhood, at the time of this video it was $86. Today it was down 1%. Now if we go to the past week, it's down 0%. For a month it's up 5%. 3 months it's up 16%. For the year it's up 32%, and then for the past 5 years it's up 156%. So if you would have bought it somewhere around this dip of April 3rd, in that we're at $34, kudos to you. Or if you would have bought it somewhere around that area, so probably would have made great money in there. So if you look down in here too, in the key metrics, you can see based on Robinhood's analysis, they rated as a buy as well. So you got 55% with 38 hold and about 5% sell. And then their fair value is about $62. So that's the research report on that one. Alright guys, for me, I'm definitely gonna just put this on my watch list. I like the company. I like that it pays great dividend, but I'm gonna see if it goes on dips. I'll probably buy some more. I'll probably buy one, but not much, probably about like 10, and that's probably it. So if you're interested in that one, definitely do your own research. Again, I'm not a financial advisor. This is just me sharing. As always, please remember, stay cool, keep investing. And if you have any other companies that you want me to review, just drop a like, a comment, and let me know what companies, dividend companies you want want me to check out. All right. Stay cool, keep investing, guys, and I'll catch you guys in the next video. All right, take care. Aloha. Bye.